Ladies and gentlemen, K-Kim here with the Traders Club. Welcome to the market update. Hope you guys are enjoying your weekend. Today's Saturday. I'm recording this kind of a mid-afternoon of this Saturday. As usual, let's continue with our weekly analysis. Let's start with the Spider, Diamond, Qs, Russell, Semi, and the banks here. Let's start with the Spider. As you see on your screen, last Friday was this day, and that was Monday, Tuesday, Wednesday, Thursday, Friday. So ever since our last Friday market update video, what we're seeing is we're just kind of a consolidating, right? So a lot of people are gonna look at that as a bull pennant pattern or bull flagging pattern, which the textbook says is a bullish pattern. And as they're gonna say, that is likely to break higher. But I've been, if you've been following me long enough, I know that I've been telling you guys that the short-term patterns can break either way. It could break to the downside, it could break to the upside. And a lot of times these consolidations are a little bit tricky. What they could do is they look like it's gonna break to the upside, comes right back down, or it looks like it's gonna break to the downside and then goes right back up. So I really don't recommend, paying too much attention to the short-term consolidation pattern. A lot of short-term traders do, a lot of short-term swing traders, overnighters, and what they'll do is they'll do this, and then they'll go long, and then they'll place their stop right here. So if it comes down, they'll get stopped out, and they're hoping to see this thing breaking higher. I actually think that it's not a good strategy, because you're gonna find yourself, what the market is gonna do is gonna come down, take your stop, and it's gonna go without you. And you're gonna probably witness that or experience that quite a bit if you're trading these short-term patterns. So at this point, I think I can give you two possible scenarios, which is up or down, because at this point I'm not sure if it's gonna break out to the upside or to the downside. So if we do break to the downside, I think 286, 284 is a level to watch. This is kind of a island reversal area. You can see that this was a gap down, this was a gap up. That's why you see a green box. Sometimes it comes down, it retests the gap area, and the area acts as support. Sometimes what it does is it comes down and fill the gap, and then it acts as support. For the bulls, if you want to see a more strength in this, we did build a lot of momentum here last couple of weeks here, but we want to see that kind of momentum continuing. We want to see this gap remains open. It will be better. It will favor the bulls more if this gap stays unfilled. But if it does get filled, it's going to probably act as pretty decent support, because we also again, first is island reversal. It was island bottom reversal. Second, this is a level that we see that 50 MA in that vicinity, and we also got 20 MA residing just underneath it. So that will be the potential scenario if we do break to the downside. If we do break to the upside, we have these gaps that needs to be filled. Again, when this gap is a pretty big gap, you can see this gap actually is like this. It's a pretty big gap, like that, right? So you can see we partially filled and we start pulling right back inside. When the gap is kind of big like that, a lot of times it fills partially and comes back down, fills partially, comes back down. Sometimes that's kind of how the market reacts to the kind of a bigger gap. If it was like a smaller gap, usually would go and just fill it and then comes right back down, or go up and gap it up and then make into an island bottom reversal. But it filled a little bit and then pulled right back in. So I moved that. So we got this much gap to fill there now. So I think with this kind of gap, and then we got with the recent move, I think we're gonna kind of hang around here for a little bit. And bulls really need to fill this gap, entire thing, and then after that gap gets filled, it's probably gonna pull back before going higher. If bulls really don't feel like pulling back, really don't feel like, hanging around that vicinity, go up a little bit, gap it up, turn into another island bottom. Let me draw it this way. I'll draw it this way, so you can look at that as island bottom. And then when I annotate island top, I'll draw it this way so you guys know. So, you know, maybe go up and gap up, turn this into an island bottom. If we see something like that, we will see the market rushing to 300 pretty quickly at that point. So let's see, let's kind of, you know, we don't need to overanalyze today. It just hasn't done anything this entire week. So let's see how the market plays out next week. And if I see anything significant that I want to note, that I want to share with you guys know that I share charts and things like that throughout the week. Not every day. If I don't see anything happening, I don't share it. But, you know, when I deem necessary, I do. So you can follow me on Twitter at 2KKim. Let's go to Diamond. Diamond, similar thing here. That long wick, it looks like it did came down at one point as I look at my intraday chart. So let's get rid of that. So you can see it came down, filled the gap, got right back up. I don't know what that was all about, but he did that. I wonder if he did or not. Because when I go to hourly, it shows it did. Is it an error? Do you guys know? Is it an error that it did that? Because it didn't do that on Spider. But why did it do it on the Diamond? See, this gap is still open. Anyway, so let's go back to the daily here. And what I want to do, I want to bring this up to this level. I think that's the important level. And then I want to do this here too. So it's because again, that's a prior resistance here. You know, let's zoom in. We're really going to have to do micro term analysis this week. That's a prior resistance there, and also you can see we got that 50 and the 100, these moving averages in that vicinity. So same analysis here, right? Same thing I've done on the S&P, same thing on the Diamond, on the Dow. We got a bull pennant or bull flag, whatever pattern this is. You know, going lower, 259, 258, some of these moving averages level to watch. Going higher, we got this gap needs to be filled. It will be best case scenario for the bulls if we just gap it up, because once the gap gets filled, it's going to act as resistance. Many times it does. It's rare cases when it doesn't. But we talked about in last week's video how it didn't do that here. Isn't that crazy? Like we filled that gap, we just kept going higher. So that's actually pretty rare. A lot of times gap gets filled. We do at least pause for days, like couple days or at least, or pull back. But we filled it and we gapped up again. I don't know if I ever seen that sequence where, you know, where we filled the gap and then we gapped up next day. A lot of times what you see is when the gap gets filled, we pull back couple days and then maybe gap up, you know. But anyhow, this is the gap that needs to be filled for the bulls continue higher. Best case scenario, gap it up and make this into an island bottom. Then we'll rush to, if you hear like a leaves rustling sound, I got my office window open. It's windy outside, so just know that that's what that is. And oh, is there a gap here? Why is it? Oh, there. Okay, so there's a little tiny gap there. Let's extend that. Actually, that will be a key level, I think. It's a tiny gap, but so yeah. So if we do see gap it up, we'll probably go to about 268 to fill the gap there. Let's go to Qs. So Qs, we came fill that gap. What happened was this gap wasn't filled. You know what I'm gonna do? I actually want to do this. Let's do that. Get rid of this one, right? I know the whole thing is not a gap area because this is a body, but we got the gap still open and we got this gap still open. So that's the kind of vicinity I want to emphasize here. So 177, 182, right? But I think, you know what? I want to do it like that actually. For now, 180 to 180 because we got the little gap and the 50 MA. It's the same analysis here as well. I think a little bit different. You know what? Let's actually separate these. The reason why I want to separate it is just in case. I want to do it like this. Just in case. Because we got up. We have bull pennant looking pattern there. If we do see, there's a little gap down. There's this one still open there. If we do see this thing gapping down on Monday or Tuesday, then this becomes an island top. Okay, and if I do see it, I'll tweet it out on at 2K Kim. And then you're gonna see this in coming back down to challenge 178, 177. So I'm gonna separate them because of we're right at it. So if we do see a gap down, that will become an island top, and then that's gonna make things a bit more hectic, and we're gonna come down and probably fill this gap at 177, and we have to reassess the situation at that point. So if you're a bull here, you don't want to see that. But even if you're long term, though, it doesn't matter. If anything, probably give you more opportunity to maybe accumulate more. But in a short term perspective, if we do see gap down, things are going to make hectic. Things are going to be hectic probably for the entire remainder of this year. If we do see a gap down, if this become an island top, probably things are going to be hectic next couple weeks. If not, we continue higher and maybe retest this gap area here. We're ways from the gap. You know, like Spider Diamond, we're just kind of right there from this gap on the Qs. We got some ways to go there. Let's go to Russell 2000. So Russell 2000, you can see we talked about this level a couple videos ago, right? We made new low. Everybody placed their stop underneath it, right? Because that was a low. And then market came down, take out people's stop, and then we got right back up here. Let's do a little bit of maintenance here in my chart. We still got, is that little gap open? Yep, that gap is a little bit open. So you know what? I'm gonna do just tiny gap. There. Tiny gap. So Russell 2000 is a little bit different looking here, right? So we got that kind of a symmetrical neckline going. Market decided that it was going to come down lower than that, you know, take out people's stop, and we actually gotten back above this neckline of potentially a wide invert head and shoulder. I actually think this invert head and shoulder is going to play out. I actually think when it's all said and done, this is going to start breaking out and make new all-time high. But for now, we're just kind of hanging around here. Let's see if we can hold such a small. I'm actually going to do this. I'm going to put 150 and here. I think that's what I want to do. 150 and 149. Let's see if we can hold that level. Because I think what we want to see, and again, I'm doing this micro term market analysis here today. We want to see, since we gotten below this low and we kind of trapped everybody here, this actually was island bottom. Do you know that? I mean, this gap is not open, right? It's completely got filled, but there's a characteristic. You see this gap down, you see this gap up. So this was that island bottom characteristic. It's not textbook island reversal because the gap has been closed, but it definitely has that characteristic. So we want to kind of keep that jump start going. You know, we want to keep that momentum going. So we want to see, even if the market slides early next week, we want to see bulls holding above this level 150, 149, not coming back inside below this 149 level. Because that was the level where market decided to come down, take out everybody's stops, right? Trap the longs, right? They took out their stops. The market took out their stop with, you know, and they took a loss. And then shorts, maybe shorts want to short more in that vicinity, thinking that that's, you know, that's the level that it made a new lower low, right? Or maybe the shorts are adding into it, thinking that that might be a lower low before, you know, lower low and lower highs, which I don't think that's going to happen. So I think we want to stay above 150, 149. Semiconductor pulling back after made an equal high there, right? So in the short term. And then, you know, last time I gave you those fib levels. Let's do that. Let's put that up there. And semi is pretty gappy, so I'm not going to analyze all the gaps here on the semi, but I think I just feel like we're in the middle of nowhere, but I just think we're going to bounce back. That's what I think. I think we're going to bounce back on semis. It may come down, make you know what I mean, like retest the lows, but I think there's a pretty good chance semis bounce back up here. but not a whole lot to talk about that at this point. Because I'm looking at my other screens here, and I just like a longer term chart. Let's go to banks. Banks. So yes, we defended or at least we're nowhere near that island bottom here. Let's annotate that with the box. Definitely this is island, right? Because gap is open. You saw a gap down, got a gap, and that's textbook island bottom, right? You can see that. So we're nowhere near that. We're trying to find support here. We're above this moving average. You know, looking at things more of a micro term. If you go zoom in here, we did cultivate higher high here in the micro term. You know, I can't even give you micro term levels. If you look at that, so we're bouncing at the first level of fib there. Again, same kind of thing. If this thing if this thing is bull pennant, if this thing does pull back, I think short term we got 2688. That's where we see those short term moving averages residing at this point. Otherwise, kind of, you know, if it wants to go further down, you know, I think the bears want to kind of challenge that gap area 2649. But then again, that's island bottom reversal, pretty strong gap there. Plus, we made a like short term higher high. So maybe we do have potentially short term invert head and shoulders. I don't know at this point, but I think sooner or later, either we bounce here or bounce here. I think Bank's gonna do well. I think Bank's gonna bounce from here, somewhere here. So, but again, we need to see 2649, 20. If we do see this thing coming down, we want to see that level holding and this momentum to continue, right? We want that momentum to be alive. We got a little bit of gap there, but if we do break to the upside, it's getting ready to come and fill that gap, and that will be a good thing because, you know, more to minor to intermediate term, we've been cultivating higher lows and higher highs. It's a good thing to kind of get up there, fill that, pause a little bit, continue higher, and continue to kind of make that higher lows and higher highs. And ultimately, we want to see banks getting up here, 20 and 98.7, because again, we've been talking about this. We're still bound by this falling channel type of move, and still we are technically intermediate term downtrend because of this. And you know, out of all the indices, banks, I mean, all the indices that we've analyzed today, banks is the only sector that has this pattern, which is intermediate term downtrend. And that makes it vulnerable. But as I've been talking about, because other indices, these larger indices are strong, I think it's going to, and you know, what is going to be the catalyst for this market to continue higher? I think it's going to be the banks. I think banks is going to finally break out of this, and it's going to push these indices, spider, diamond, Qs, and even the small caps, push these indices to higher level. So that's it for me today. You guys enjoy remainder of this weekend, and good luck trading next week.